Just confirm when we are live. Are we live now? I think yes, we are live now. So friends, indeed, a warm welcome to one and all. I see a Pratik Neve. Welcome all of you to ZEST Learning. Friends, how are you all doing? I hope you all are doing very well. Yes, for those whose exam is due in January, it is coming very close. And yes, this video is also for them who are appearing for May exams or September exams. So yes, let's start with today's session. Today's session is about the important sums in indirect taxes, and of course in that input tax credit. Of course, all of us know this is a batch of IDT covering important sums of GST and customs. Okay, so yes, ITC, some of the questions from rules we will be covering. Apart from that, some of the other ITC important questions we will be doing. So this is our session number 12. If you have not followed earlier sessions, do follow them also. So yes, let me know who all is watching it live. I know many of you will be watching the recorded version as well. So friends, I'm going to page number 61. Okay, I'm going to page number 61, which is this. Chalo, let's start. So in this, we have to do question number 12. So I hope all of you are there on question number 12. Astratic Manufacturing Private Limited purchased raw material X 12,000 kgs at 90 per kg plus GST. The raw material was used in manufacture of product Z. So I can understand product Z is my finished goods. Raw material X is my inputs. The company has provided the following additional details. Now, processing loss on input X is 2%. But you know what? Processing loss is a normal loss or abnormal loss. So processing loss is of course, normal loss. So when I talk about normal loss, I will not disallow the ITC. Clear? I will not disallow the ITC because if there is a damage, lost, destruction, or writing off of any inputs which are used in manufacturing of finished goods, then of course ITC is blocked as per 17.5H. But this is a normal loss, that's why ITC will not be blocked. Okay, so just forget it as of now. Okay, transaction value of finished product Z is 110 rupees per kg. So can I say this is accessible value per kg? But sir, how many kgs we will be manufacturing? So very simple. Raw material X we are using is 12,000 kgs, and from 12,000 kgs there is a loss of 2%, normal loss. So 12,000 minus 2%, 11,760 kgs you will be manufacturing. So 11,760 kgs into 110 rupees, 12 lakh 93,600 will become accessible value of finished goods. Did you all get this point? Yes, sir. So now, sir, why are we getting accessible value of finished goods? Because eventually, what is the question asked? Question asked is compute amount of ITC available. So that we will do, and also net GST payable. Now, for calculating net GST payable, what you have to do is output tax minus input tax credit. So you will need the output tax. For getting output tax, what you will have to do, you will have to get the accessible value of finished goods. So take on your calci 12,93,600 into what percent is the GST? The rate of GST applicable on raw material X, input material Y and finished product Z is 12%. So please calculate 12,93,600 into 12%. So 1,55,232 is your output tax, isn't it? Now only thing is you have to get ITC. So take now entire ITC on the input X, that is raw material X. So 12,000 into 90, which is 10,80,000 will become the purchase cost. On 10,80,000, calculate GST at 12%. So isn't it 1,29,600? Just check. I have done the detailed working also for you. So as of now, you just follow this rough working. Then I will show you the detailed working. Go ahead. Additional input Y used in manufacture of Z is valued at 2,40,000. Okay, plus GST. So take on your calci 2,40,000 into 12%. So that is 28,800. So I'm just putting a box around the ITC. So you're going to get ITC of 1,29,600, 28,800, and then go for GST on capital goods. Of course, you get ITC on capital goods also. So GST on capital goods imported during the period and used in manufacturing Z, that is the finished goods, includes basic custom duty. So basically this is imported capital goods of basic custom duty and social welfare surcharge. You don't get any ITC. But sir, will we get ITC of IGST? The answer is yes. Okay, that's it. So take total of whatever I have put in the box of all those things, you can take ITC. So 28,800 plus 129,600 and plus 12,000 rupees. So friends, 1,70,400 becomes your total ITC. Are you all with me? Nimiji, did you understand? 1,70,400 is total ITC. Your total output tax is 1,55,232. Now, of course, net GST payable therefore will be nil. So net GST payable is therefore nil, and extra ITC that you can carry forward to next tax period, that is next month, will be 15,168. Are you all getting 15,168 being the excess of ITC to be carried forward? Just confirm, just let me know. Then I will show you the detailed solution, formal solution. And after that, we are going to go to questions based on rules. Yes. Absolutely, sir. It is clear. Wonderful. Wonderful. Okay. See, this is a detailed working. For 2 minutes, I'll leave you with the working. Just take screenshot wherever possible. And I'm going to send you this notebook. So, computation of net GST payable for the month of so and so. Particulars, amount in terms of rupees. Output tax 12,000 kgs minus 2% loss. 11,760 you got total kgs sold into assessable value per kg 110. You are getting 12,93,600. On that, calculate output tax at 12%. You are getting 1,55,232. And then go for ITC. Firstly, on input X, 12,000 kgs into 90 rupees per kg into 12%, 1,29,600. For Y, 2,40,000 into 12%, that is 28,800. And lastly, for capital goods, you will take it on what? You will take it on IGST only, that is rupees 12,000. Therefore, total ITC that is available with you is 1,70,400. So net GST payable is of course nil because you have extra ITC. So how much of extra ITC you have is 15,168. Is it 100% clear to all of you? Shall we go ahead to the next concept? Now the next sum, friends, that we have to do is based on some important rules in ITC. Those are rules connected with section 17 of CGST Act, that is apportionment and blocked credits. Especially the rules are related to 17(1), that is apportionment of ITC, where inputs are used commonly for what? Commonly for taxable goods, commonly for making outward supply which is taxable, zero rated and exempt. So basically what I told you just now is 17(2) actually. And what is 17(1)? 17(1) is when the inputs or inward supply is used commonly for business use as well as personal use. So ITC is not allowed to the extent used in personal use. So what I'm doing, I'm combining 17(1), 17(2) of apportionment. Clear, Nimmi? I'm combining, clear, Chinu? I'm combining both the points of apportionment and telling you, and plus the rules related to the same we will be using. Okay, see what the rule says. You're using some inputs, say for example your inputs are plastic. Some plastic raw material is your input. That input you are using for making a supply of finished goods which is taxable. Okay, now for example, you are manufacturing utensils. For example, you're manufacturing utensils and selling it within India. Now selling within India is called as DTA sales. DTA means domestic tariff area. Okay, that is not in special economic zone. So let's call it as DTA sales. Okay, domestic tariff area. Just one second. Clear, na? Then friends, there is a zero rated supply also. Zero rated supply means it is exports or to a supply or supply to a unit in special economic zone. Okay, and lastly, suppose there is a supply of plastic bangles. Example, these plastic bangles are exempt. Okay, as well as some inputs are used for personal use. Now, suppose on these inputs there is a ITC of 3,60,000. Very obviously, you can't claim entire ITC of 3,60,000. The inputs which you purchased were of 20 lakh rupees, and on that GST is 18%, that is 3,60,000. So of 3,60,000, how much ITC can you take? So obviously you can't take ITC of entire 3,60,000 because some portion of the raw material is used for making taxable supply that is utensils which are sold within India. Some of it is used for zero rated supply. Zero rated supply means exports. So government is ready to give you ITC of this too. But government is not ready to give you ITC on inputs which are used in exempt supply. Now here is where the calculation comes into picture. The calculation is on what basis? The calculation is on proportional basis. And as far as usage for personal use is concerned, then the rule is fixed. What is the rule? 5% of common ITC will be disallowed. It is always 5%, my dear friends. This is fixed. I have not fixed it. It is fixed by the rule. So once write in the chat window, write in the comments, how much will you disallow with respect to the inputs which are used for personal use. So you will disallow 5%. Is it clear to all of you? Now, if this is clear, then we will go ahead and do one question on this. The question is very interesting. Pay attention. It is question number 13. It is question number 13. Go through the question, friends. Glamour Cosmetics Private Limited manufactures 4 variants of nail enamel, namely blush, let's call it as B, gloss, let us call it as G, lux, and shine, L and S. So B, G, L, and S. These are the 4, you can say, finished goods manufactured by this Glamour Cosmetics Private Limited. Company has availed ITC of 3,60,000 on common inputs. It has taken ITC of 3,60,000 on common inputs which are used in production of these variants. Means you can say these finished goods. Portion of these inputs is also used for non-business purposes, that is personal purposes. Okay. During the financial year, company manufactured 1,200 liters of each variant of this nail enamel. That is the finished goods which is manufactured. 1,200 liters of each one of this. However, company has not maintained any separate record of input usage for each final product, and GST is payable on final goods at 12%. So the rate of output tax means the rate of GST on finished goods is 12%. You are required to calculate net GST payable, okay, by this entity for the financial year based on following information. Now focus. This product blush is sold in domestic tariff area. That is, this is a normal supply, normal sale. On this, there will be GST of what percent? On this, there will be GST of 12%. Any doubt in this? No, sir. No doubt in this. Sold to SEZ, sold to a unit in SEZ or exported, friends, this is called as zero rated supply. What this is called as? Zero rated supply. So on this, GST will be 0. See friends, now here we are discussing about output tax. Okay, and of course we know that ITC which we have taken in the e-credit ledger is 3,60,000. But just answer my simple question, will 3,60,000 be allowed as it is? Of course it will not be allowed, because it is used for all these 4 things. Okay, So ITC attributable to this and this will be allowed. But what about uh, exported to LN in Canada? Yes, this will also be allowed because it is also zero rated. So no problem. This also will be allowed and output tax will be zero. But sold to armed forces canteen where the GST is exempt. So friends, here again there will be no output tax, but ITC will not be allowed. Clear? But ITC will not be allowed. Why ITC will not be allowed? Because it is not allowed to the extent used in exempt supply. Obviously. So don't allow. But for these three, you can allow. Because see, one logic I will tell you. In case of exports, it will be allowed. Why? You are using raw material, paying GST on that, and then you're manufacturing finished goods and exporting it. Means you're earning foreign currency for India. Yes. So when you're earning foreign currency for India, Indian government says, well done. We will not charge any output tax. You know why? Because the place of supply is outside India. So we will not charge any output tax. But will you get ITC? Yes. So that your purchases becomes GST free. So it's a double benefit, my dear friends. It is intentionally given. So ITC you can take. Now, of only one thing we can't take ITC, that is to the extent used in this shine. Now, my question is, we have to calculate net GST payable. So, my question to you is, how to calculate assessable value of outward supply? That is my simple question to you. So, let's calculate some mathematics you have to do. Sale price is given, which is per 20 ml bottle. Sale price of per 20 ml bottle is given and all values are exclusive of GST. Okay. Sold in DTA is rupees 36. Okay. And can you see that during the financial year, company manufactured 1200 liters of each variant. So can you convert 1200 liters in ml? So 1 liter is 1000 ml. So 1200 into 1000. Did you all get 12 lakh? Yes, sir. We got 12 lakh. Can you do divided by 20 so that you will get number of bottles? So are you all getting 60,000 bottles? So friends, 60,000 bottles of each variant is sold. Now 60,000. I hope all of you got the calculation. Of course, don't worry. I have done a spoon feeding for you. I have solved it for you. So I'll show you the solution. But I request you to take on your calci right now 1200 liters. That means take on your calci 1200 multiply by 1000 because I want to calculate in ml. So liters I am converting in ml. I am getting 12 lakh. 12 lakh ml divided by 20 ml because I want number of bottles that I am selling to get the assessable value. So I must be getting 60,000 bottles. So do 60,000 bottles into rupees 36. So we are all getting 21 lakh 60,000. So do 21 lakh 60,000 into the rate of GST, which is 12%. So which is 2 lakh 59,200. So friends, your output tax is 2 lakh 59,200. So all of you, those who are watching right now live, please tell me, have you all got 2 lakh 59,200 as your output tax? And now, of course, there is no output tax on exports Okay, that is zero rated supply. There is no output tax on that. Already I have written zero, and there is no output tax on exempt supply. So this 259 200 becomes your total output tax. Are you all getting? 2,59,200 as your total output tax. Very good. But my question is, what is the ITC? So let's, for that purpose, believe me, you will have to calculate overall sales. Right now, you have got the sales for goods sold in domestic tariff area. Now, accordingly, get sales for sold to unit in SEZ. So, take on your calci 60,000 bottles into 48. So, are you getting 28 lakh 80,000? Then friends, 60,000 bottles into 60. Are you getting 36 lakhs? You must be getting 36 lakhs. Now 60,000 bottles into 72. Are you getting 43 lakh 20,000? Take on your calci the total. That will be the total turnover. What's the total turnover that you are getting? So 43 lakh 20,000 plus 36 lakhs plus 28 lakh 80,000 plus 21 lakh 60,000. Are you all getting 1 crore? Check, tell me, are you getting 1 crore 29 lakh 60,000? So friends, if you are getting 1 crore 29 lakh 60,000 as total turnover, why are we very good answer. Why have we calculated that? Let me tell you. Point is, your total ITC is 3 lakh 60,000. That is being used for manufacturing goods of 1 crore 29 lakh 60,000. Yes, but your exempt turnover is 43 lakh 20,000. So if 3 lakh 60,000 was ITC, which is used for total turnover of 1 crore 29 lakh 60,000, then if the exempt is 43 lakh 20,000, then how much ITC will be for exempt? So now simple, do the cross multiplication. How much will you get? So you will get 3 lakh 60,000 into 43 lakh 20,000 upon 1 crore 29 lakh 60,000. Are you all getting it? Do this. Of course, don't first multiply, first divide, because the figures are huge. So 43 lakh 20,000 divided by 1 crore 29 lakh 60,000 into 3 lakh 60,000. You must be getting 1 lakh 20,000. Yes. So this 120 will be not allowed. Okay. And apart from that, don't forget that you are also using the inputs for personal use. It is given, very nice. It is given that it is also used for non-business purpose. So for non-business purpose of common credit, you disallow 5%. That is the rule. So you will disallow how much? You will disallow 18,000. So can you take on your calci 18,000 plus, sorry, 1,20,000. So what is 18,000 plus 1,20,000? Isn't it 1,38,000? So 1,38,000 can't be allowed. Okay, if 138 can't be allowed, then take on your calci 360 minus 138. What is 360 minus 138? Isn't it 2,22,000? So friends, only 2,22,000 will be allowed. If only 2,22,000 will be allowed, then what to do? What was your output tax? Your output tax was 2,59,200. So take on your calci 259,200 minus 2,22,000. So isn't it 37,200 your net GST payable? Exactly. So that's the answer, 37,200. Did you all get it? Isn't it simple? So friends, fundamentally, this is the question, or such questions will be asked of section 17.1, 17.2 and the allied rules. Will you be able to solve them? Did you get the required confidence in this? Just let me know. So there is 37,200 is the final answer. Check. But now, better way of doing this, I will tell you. So sir, what is the better way of doing this? Better way of doing this, and ideally what will happen is 259,200 will be on the finished goods. First of all, have you got the answer, Nimmi? 259,200 will be on finished goods, and then 138 you will add to the output tax. Which 138? The one which is ITC disallowed, that you will add to the output tax. Can you see this? Yes. So 397,200 will become payable, and then you will use the ITC of 3,60,000. Clear? And you will get net GST payable of 37,200. Is it clear to you, this way of presentation? Just confirm to me. Yes, I am waiting for your reply. So computation of net GST payable, output tax, sales in domestic tariff area, I have shown it. Then sales to unit in SEZ, no tax. Exports to LN Inc., no tax. Exempt supply, no tax. Total output tax on outward supplies, 2,59,200. Then ITC to be reversed, that is to be added to the output tax. Okay, as entire ITC on common inputs is allowed of 3,60,000. That's why you are required to add this. With respect to used in exempt supply, you are adding 1,20,000. With respect to used in personal use, you are adding that 5% of common ITC. So total output tax finally is 3,97,200, and then take total ITC of 3,60,000. So finally your net GST payable is 37,200. Is it figure wise clear to you? Please let us know so that we can go ahead. Then I've shown you detailed sales working. Okay. So each sale is of 1200 liters. It's given. So 1200 liters into 1000 ml, 12 lakh ml. So 60,000 bottles of 20 ml each. Then going for each of the sales figure, just multiplying per bottle value into number of bottles. Okay, wonderful, wonderful. So I've shown everything in detail. Make sense? Okay, I'll go ahead then if it is 100% clear to all of you. Okay. So I just wanted to do this sums in detail so that you get idea of how to apply the rules. Okay. So friends, more questions of this we are going to do in the upcoming session. Clear, na? Yes, absolutely. So I want to take one more session after this, okay, on this particular ITC questions. Then we will go to some other topics as well. What are the other topics on which we will deal in next 1 to 2 days? One more small session like this we will take on ITC, and then we will deal with refunds. So we'll take 4 to 5 more sessions. We will take one on returns, then one on FTP. Surely we will take one on FTP also. Okay, and offenses and penalties and appeals. In appeals, especially the calculation of what the you can say pre-deposit money. Surely we'll do that. So that's it. Thank you so much for this, paying attention to this well, and be dedicated as usual, and stay blessed. I'll see you in next session. Till then, keep the channel subscribed. I'll see you. Bye bye.